Today marks the exciting launch of Fidelity Global Micro-Cap Fund to the Canadian marketplace. The fund uses a blend of fundamental and quantitative research to find quality businesses at attractive prices anywhere in the world. And as you'll learn more about today, this is a resource-intensive product that only few asset managers like Fidelity can bring to the market. Joining me today to talk about Fidelity Global Micro-Cap Fund is the portfolio manager, Salim Hart, direct from Boston. Salim, congratulations and welcome to the webcast today.
Thanks, Glenn. Great to be here. I think the last time I saw you was late April at our Fidelity Canada event in Beverly Hills. For the last several weeks, I've been busy literally pouring through thousands and thousands of micro-cap companies to put in the portfolio, which is launching today as we speak.
Reason for celebration. It's wonderful to have you here. Very timely. I do want to remind the audience, do ask questions through the Zoom app. Hit the button and I'll see them when they come in. Now, you mentioned global microcap. That's what the topic is all about. That is a rarely heard investment capitalization. I don't know the last time our viewers have been on a webcast listening to a global microcap discussion. But before we get to the fund, I'd love to just have you remind everybody about your experience in the industry with Fidelity. You started in 2007. You've worked with Joel Tillinghast for a number of years on his U.S. portfolio, low-price stock fund, and also global intrinsic value, which we have in Canada. You also have mentioned before that you've been referred to as Robo Joel. Please take us through your time at Fidelity so far.
Yeah, so I started working with the small cap team here in Boston, along with Joel Tillinghast, who most of you guys know as the legendary investor on low price stock fund. And so we've worked together for many years, and it was kind of funny. I was doing a lot more of the quantitative work for him. He's actually a very quantitative person, a by the numbers investor, but somewhere along the line, our boss started calling me Robo Joel, and which I thought was going to be really good for my career. And then in 2015, as you know, we launched Global Intrinsic Value in Canada together. It was a Joel-only fund, and I was put on to help him really just do everything day to day and find great stocks across the world. So we've been working together ever since then. Joel retired at the end of last year. Sam Chanovitz and Morgan Peck have been brought on to Global Intrinsic Value and the other portfolios to carry on in the traditional stock picking methodology of Joel. And I'm here launching Global Intrinsic Value, launching Fidelity Global Microcap to focus on what's new for us, but we've been doing for many years in parts of the portfolio in the smallest and least covered and most out of favor stocks all across the world.
Thank you for that overview. So it's fair to say then, Salim, that one of the tales of Global Intrinsic Value could be the inspiration for Global Microcap. Could you take us through the premise for this launch?
Absolutely. So I've actually been piloting a microcap fund here at Fidelity for 10 years now, over 10 years. We weren't really sure where that would kind of come to fruition, but we wanted to test the concept as I was working alongside Joel, and really felt like there were lots of opportunities in this space. I think that's really my mantra for microcap investing is opportunity. And Joel's always run his funds with a large number of names, and there's always been discussion from investors. Is that really necessary? Does it add value to the fund? Why does he hold so many names? So we ran a study that really looked at the tail of Joel's portfolios over many years since 1989, since he started managing low price, and we saw that that tail actually outperformed in both up markets and down markets, and added a lot of value, all those small micro-cap positions. And I remember we were in Palm Beach at one of the Fidelity Canada conferences, and Rob Strickland, who's the president of Fidelity Canada, came to me and said, could we just launch a Joel's Tail Fund? That would be great. And I thought, that would be great. That's a great idea. I never really thought of that. So I went back to Boston and I talked to our boss, and he said, now's not a good time. There's a lot going on. Joel needs them for his portfolios. And over the years, since then, Joel has gone through retirement. We've been very busy transitioning the portfolios through that. But it now is the right time. Boston, Fidelity Canada, good time for our investors. Everybody's on the same page, and it was. We have the technology to support it. We have the expertise to support it, and we all felt like now is the right time to launch Global Microcap.
Thank you. And can you talk about the performance through the pilot process?
Yeah, the performance has been very strong. I mean, I think that's what kind of led to the concept being being given the green light. Performance of the pilot fund has been very, very strong, similar to some of the other funds we manage, beating 90+% of the peer group. But also, I think, Glenn, if you know, what we kind of proved is the microcap space, and we'll probably talk about just the dispersion of returns in that space, right, among really small companies. The key is to avoiding the big blowups and the big losers. And we were able to really show through that process of piloting the strategy that we were successfully able to really avoid a lot more of the 50%, 75%, big stock drawdowns and blowups during the course of those 10 years. And really show that we do, our stock picking is able to provide value there and protect investors on the downside.
You mentioned Robo Joel earlier. I just want to clear something up. You are thought of as a quant investor, but you're really fundamental as well by way of education, but also experience that you've had. Can you talk about coupling the two?
Yeah, I have an MBA from Sloan here in Boston, and I think Fidelity is not a quantitative investing place, so anybody that's hired has to have the knowledge to be able to work with fundamental investors, do fundamental analysis, evaluate companies, understand all the financial statements and what kind of drives returns. So I think it's a balance. I do have a background before Fidelity on working with large data sets and programming, and I'm able to kind of quantify and automate and make more efficient, a lot of the investment processes that go in. And I think that's one reason I've been so successful kind of working alongside Joel with large numbers of names. It's kind of, I will say, I think you like this joke, you've heard it before. Joel has a photographic memory and his mind is basically like a walking computer, but he isn't actually that good at using computers. Sometimes I have to help him, like, how to find a tab on Excel. I'm kind of the opposite. Like, I'm really good at the computer, but don't really remember anything. So I think that skill set where I can rely on him and our team of fundamental investors, but take that into account and understand how to make a process efficient really lends itself to a product such as this.
Good. I'd like to dig into how you work with all the resources at Fidelity, but before we do, a question just came in that makes a lot of sense. Can you define microcap for all of us, please?
Absolutely. So in this product, we're basically taking the bottom half of the MSCI World Small Cap benchmark and all the way down through 50 million. Our smallest position is 60 million USD market cap in this fund. So it's basically somewhere in the, I don't want to say zero, in the teens USD million market cap all the way up to somewhere in the 3 billion range. And that'll kind of float depending where the market goes up or down, but we kind of have a hard stop middle of the small cap benchmark and smaller. So USD, let's call it 50 million to something in the 3 billion range.
Okay, and that leads to a question on geography. You mentioned the Morgan Stanley Small Cap Index,
MSCI.
The MSCI.
Yep.
Most of us would be familiar with the Large Cap Index, which would make the United States a dominant position. Yes. What is it for small cap? What's the geographic allocation look like?
That's a great question. I mean, even the small cap benchmark, which is what global intrinsic value is benchmarked to, is 60% US. But in the microcap space, it's only a quarter, 25% of the benchmark is US. So it's really interesting to see that microcap companies are much more prevalent outside the US. So even in Canada, much more in Asia and a bit in Europe, there's just a much more prevalence and acceptance, I think, of microcap companies in those geographies. So that kind of gives you a perspective of just how global it is. And I think that lends itself to the US has been quite in favor of, for many years. And I think this is just one way that investors can diversify and can get broader exposure to more out-of-favor areas.
You've mentioned diversification a few times. So as an investor, should I have a tinge of risk in my stomach when I think of microcap? Should any of us feel that? Or is that diversification really something that makes you feel a lot more comfortable about the makeup of this portfolio?
I mean, I think it's natural to say, oh, a microcap stock is very volatile, very uncertain, could go up or down a lot. And I think that's true if you're talking about one microcap stock, right? So if I put a significant chunk of my portfolio or my assets into this one company in Japan that rents kimonos, that would be a risky investment. because a lot of things could go really well or go really poorly with that business. But when you're forming a portfolio, which is what we're doing in many names, we're able to take all these little companies that have a lot of company specific and stock specific risk and diversify that out. So what you're end up with is really what looks like a very cheap, very high quality conglomerate business, that's very geographically and sector diverse. So that, the volatility of the microcap benchmark, Glenn, is actually the same or a bit lower over time than that of the small cap benchmark. So I think people are maybe misinformed about one microcap versus a well-diversified, risk-averse approach to picking microcaps and forming a portfolio.
So that makes sense. One stock has a lot of potential risk with it, but is there a point at which you could be over-diversified? How did you find what number should be the sweet spot for this portfolio?
Yeah, so if you think, our universe is about 7,000 to 8,000 stocks. That's a very large number. So even if you just take the top, say 10% of those, the companies that we think are the best 10%, that's still 700. So the portfolio is going to end up somewhere in the 500 to 1,000 name range, right? We're always looking at buying in that top 10%. We won't sell immediately when it gets out of that top 10%. We might stop buying for a time period or forever if it's no longer attractive, but that doesn't mean it's a sell. So the name count will gradually creep up as we're kind of finding new names to buy that present new opportunities. But I think investors need to be aware that even with a high name count, it's still very different than the benchmark in its characteristics and how cheap it is and what a high quality portfolio this is, and not be afraid that we're just benchmarking, which would actually be pretty bad in the microcap space, Glenn, because the overall characteristics of the benchmark are actually lower quality than, say, smaller large cap benchmarks. So stock picking is really important here. And I think that by excluding, let's say, 80 to 90% of the companies in the microcap universe, we're able to not be over diversified.
Okay, so let's pick up on the words, or those words you just mentioned, stock picking. You are sitting in Boston. You are not going to hop on a plane, travel around the world, go do company meetings. You're not going to go upstairs at 2:45 summer and do company meetings. You're instead going to rely on the resources that are afforded to you from Fidelity. Could you please talk about that?
Absolutely. I'm not sitting in company meetings, meeting with management teams. We have a great team of multiple hundreds of analysts that do that feed their ideas into the portfolio. What I do, Glenn, I guess, is I'm gonna last year I went to our London office. This summer I'm planning to go to our Tokyo office and our Hong Kong office. I'm gonna meet with all the analysts there. I'm also gonna meet with the trading team in Hong Kong, really talk about liquidity in the microcap space, how to manage that well, what opportunities we can build upon to our capabilities that we already have. So it's more about making sure the processes that feed into this microcap fund are well maintained via in-person meetings, via proper communication with all the analysts and traders all around. So that's where my focus is when I do travel around the world. And I should say that we publish a lot of research notes, like even for companies that we don't formally cover, like on a quarter-to-quarter basis. And that's what's really exciting. And I think another reason that we were able to launch the fund now is we are using AI and large language models to read every research note that Fidelity analysts publish every day. And this is really interesting because it's using a cutting edge technology, but with proprietary information. It's not like we're just reading the conference notes, right? Everybody has access to that. Everybody's already doing that. We're actually using AI to quantify the sentiment of our internal research notes, the analysts that are meeting with the companies that are going to conferences. And we've done tests over multiple decades. We've read well over 500,000 research notes using GPT-4 and Llama 2, which is the meta competitor to GPT-4, and found significant value in being able to quantify these research notes. So that's really a great feeder for the microcap fund and allows us to have the breadth. I was talking to Joel last month. We had a happy hour, and I was like, Joel, do you think you could read 200 research notes, every day that they get published? And it's like, yeah, that's even a lot for me. I had a hard time keeping up with it. It's like with this new technology, we can kind of screen out where to pay the most attention to. And I think in the microcap space, That's really important because we do have a wide breadth of these, and we really just need to find what are good companies, and maybe less so on quarterly reporting, cycle, because our holding period is going to be 2 to 3 years, like it has been in some of our other funds. So we're looking for these good companies. I think by being able to quantify this vast pool of fundamental research that we have here, we can effectively do that and feed into the market. Sorry for the long list, but I'm really excited about that.
Thank you. That was very thorough, and it just shows the amount of technology that you have at your fingertips that's only going to get better. And then coupling that with fundamental and the knowledge that the analysts and traders globally have of what you're expecting makes for quite a machine. When do you sleep?
So I have a little break between 4 p.m. and 8 p.m. every day when there's no global market that's open. But last night at 8 p.m. was when Japan opened for Wednesday trading of the launch of the new day. So the evenings I'm online with them. Europe just closed. But I do sleep at the end of the Asian trading day and the beginning of the European day.
I hope this is a fair question, and if it's not, just tell me so. But how do you and the traders trade micro-cap companies in such a way that the street doesn't catch on?
Yeah, we have the technology to be passive in dark pools. We respond to block offers. Often there are investors on the other side wanting to sell big blocks of stocks, and we're often one of the first buy-side investors that the brokers call because we do have such a large depth to our book, and we have a lot of assets. So we can often buy those at discounts, which is actually quite favorable, right? If you can put up the capital to buy somebody's entire 1 million share block that they want to sell, they're often willing to get out quick. So by having capital, you can actually sometimes trade more cheaply, which is kind of counterintuitive to a lot of people. That's not always the case, but we also have trusted relationships with these brokers. So we will sometimes give our orders to one broker, and they will manage that in a very in a way that doesn't reveal ourselves to the market. But also just talking about name count, if we're in the market for one stock and it doesn't move against us, whether that's because of us or just because there's other investors or news flow, we have the ability to go to the company number 501 that we also like and maybe hold off on company number 500 for a little while until the price comes back. So that name count also gives us flexibility in the way we trade. I always tell people it's a lot easier to trade 10,000 shares of 100 companies than it is to trade 1 million shares of one company. So that we utilize name count in that respect also.
Do you expect capacity constraints to come in short order for this micro-cap fund?
I don't know in short order. I think we'll have to see. We've kind of estimated, it's a very rough guess, the capacity is somewhere between 1 and 3 billion. There's a lot of factors that go into that in terms of the timing of flows and how quickly or slowly they come in. But at some point, we could get to capacity. And I think people have to be prepared. It's not good or bad. It just is what it is. If we get to a point where we feel like current shareholders are being disadvantaged because the fund's too big, we will close it. But we don't want to in short order. We want everybody to be able to get in who wants to invest in the fund.
We are getting a lot of questions from the audience on liquidity. You did talk about it with dark pools. Is there anything else that you want to add as far as liquidity around microcaps and the access that Fidelity has?
Yeah, I think I talked a lot about the trading aspect. I probably work a lot more closely with our trading desks here in Boston, in London, and in Hong Kong than many portfolio managers do, not just because we're in the global stocks, but this is a global portfolio as well. And I think just that relationship and Fidelity is known to have a very good, efficient trading desk. So yeah, I think we have the capabilities on that side that lend itself to microcap trading. And I guess my experience working with Joel, working on global intrinsic value, we've been trading microcaps for a decade, and we have the expertise and kind of know how to do it really well. So I feel like that's kind of a well-oiled machine. And I talked to Joel a lot about this. I actually went over the initial portfolio with him last week when he was in the office, and we went through it kind of line by line, talked about limit orders versus small incremental trades. Sometimes you have to step out of the market for a day or two in stocks you want to buy, even if it's going to take you 2 weeks to buy it. And that's just part of the of course. We've been doing that, and I think, without revealing too much, that I think we have a good system and good expertise.
And previous liquidity of a name must factor into the metrics that are put together to determine a buy, sell, or hold. Certainly a buy for the portfolio. It's not that you
Absolutely,
just go in
position sizes. Position sizes are based on many things. They're based on risk. They're based on conviction, and they're based on liquidity. All those things go into how we size the positions, and that's some of the quantitative tools that I use, both from a risk perspective, but also from a portfolio positioning size perspective and the portfolio construction perspective. And I think fundamental analysis is really good for identifying long-term alpha opportunities, and quantitative techniques are really excellent at managing risk and forming portfolios and doing portfolio construction.
Great. If a micro cap name turns into a small cap, then turns into a mid cap, then turns into a large cap, do you have to?
That would be great.
Do you have? That would be good, cause for celebration. But do we have to change the name of the fund?
No, we don't have constraints on staying in those names. We are self-constraining in terms of we're only going to buy, like I said, bottom half of the small cap index into the micro cap, right? That's where we buy. If a name runs and goes up twofold, threefold, tenfold, 100-fold, and you see a name in the portfolio over the course of however many years that is a 10 billion market cap company, that's cause for celebration. We're not forced to sell it, and as long as it is achieving our goals and we have a good outlook, we're going to keep it in the portfolio. As long as it's not too expensive or the fundamentals haven't changed. It's really great that we have that flexibility. We have that in all of our funds, and it's kind of a mantra of the legacy Joel type investment, right? Let your acorns grow into oak trees and hang on to those as long as they meet your investment.
Thank you. Is there a parallel to private equity investing here for investors?
I mean, to some extent, I think microcaps are probably, kind of by definition, the insiders, the owners, the people who run the company are often much bigger owners of these companies as a percent of their market cap, right? So they might own 10%, 25% of the company and are running it really truly like owners rather than maybe just a CEO who has some stock options. So I think in that sense, they are being run as private equity. I think you also have to be careful, though, Glenn, about running into misaligned incentives, right? Are they running it for the benefit of shareholders or for the benefit of their 25% stake or their position in society or whatever, right? So I think it can go both ways, and that's our job to kind of suss that out and make sure that their goals, when management or owners do own a large chunk of that, are aligned.
Interesting parallel. Could you give us an example from the pilot of a micro-cap name that worked out very well for you?
Yeah, these, there's several names that we've owned for a decade plus, whether it's in global intrinsic value, whether it's in my small cap pilot, my micro cap pilot, started as micro caps and are now, mid or large caps. The name that people always think of with Joel, that was before I existed at Fidelity, was Monster Beverage, which went from 40 cents to 150, right? That's his famous stock of a very micro cap to a large cap. One we've owned in global intrinsic value through the end of last year was Deckers. They make UGG boots as well as other footwear, and they're just super great at product innovation. It was probably a 2 billion cap company, 10 plus years ago. So maybe at the edge of the micro cap space at the big end of it, but it's just compounded so well. They've introduced new brands. The UGG franchise is still, successful, even though some people really hate the look of it. But those types of companies where they're just always innovating, doing great things, building the market share. I guess the theme is quality compounder, starting price matters, reasonable valuation, good management team in a niche area of a business that they can kind of grow and take advantage of and earn high returns in.
When it comes to the launch of Global Micro-Cap in Canada, you are a pioneer because nothing, as far as I recall, nothing like this exists in the retail space in Canada. Why do you think that is?
I've been told by the product team, it was a surprise to me actually, that there are no other retail micro-cap funds, I think global or otherwise. I'm not an expert on that, but that's what I've been told as well. So I think it's just an exciting opportunity for everyone. Fidelity included, to be kind of the one out there, but also just the people, I guess, before this didn't really have access to to invest in that space, and it's so under-owned, so just kind of forgotten about, and there's so many alpha opportunities there. I think it's an opportunity for everyone to get a little exposure, especially if you feel like your portfolio is in areas that are a little crowded or overowned. It's a great diversification for a portfolio that also has a lot of potential for alpha and stock.
Thank you for that. Let's conclude with a two-part question.
Okay.
And that question, I think, would be, what is the opportunity in the micro-cap space right now, considering most investors seem to be talking about some pretty big names all the time?
Right.
What's left as far as opportunity? And finally, where do you think this fits in an overall portfolio, Salim?
Yeah, so kudos to Fidelity Canada for launching a global micro-cap fund at a time when it's probably one of the times it's been, maybe the most out of favor over many decades. So global micro-caps are trading at a discount to their 20-year average valuation, despite the market being at all-time highs. US large caps trading at, I think, a 25 to 35% premium to their 20-year average valuation, and even international large caps trading at a decent premium to their 20-year average valuation. So you see it in the numbers, you see it in sentiment in terms of just volumes and people really ignoring this space, being apathetic toward it. So it's great that we can launch a fund at a time when it is out of favor, rather than a fund that launches when everybody is excited about an asset. Right? So I think that's the opportunity there. Is this is an exciting product, and it's at a time when everybody, I wouldn't say hates, that's a strong word, but it just doesn't care about the space. So that's the opportunity set, I feel like, right now in microcaps, in the global microcap space. And you asked where it fits into a portfolio. I've always told people, for those who know global intrinsic value, it's diversified over lots of geographies, but also over many market caps. It gets a lot of its stability from its large cap positions in the fund that provide a lot of ballast there. So I often tell people that global intrinsic value is a great core position for some investors to use as potentially their biggest allocation to their equity part of their portfolio, because it is so diversified and has so much ballast. Microcaps, the global microcap fund, I think, is a little different in that I think of global intrinsic value maybe as the tortoise. If you know the tortoise and the hare story, slow and steady wins the race. I wouldn't say that the microcaps are the hare. There's other funds out there that are that, but my analogy has been, it's like the alligator. It's slow, steady, but it can have a lot of bite, right? So I think the global microcap fund is a good thing to have as a small allocation, but for everyone's portfolio in their equity space, because they probably don't invest in this on their own that much. It takes diversification. It takes a lot of time and effort to trade these and find opportunities. So I think having a small allocation across everyone's portfolio could be a good idea.
Excellent. There you have it, a unique, proven, and resource-intensive opportunity, Fidelity Global Micro-Cap Fund, run by Salim Hart. Salim, thank you so much for joining us today.
Thank you, Glenn. Look forward to seeing you again soon.